also, I think, very important. So I think there are a number of factors that led to the decision, but there's a lot of time, and I'm not really coming to work every day counting the days. Far from it. I'm counting the number of things that I have to do and the number of great opportunities this company has.
You talk about fresh air and fresh ideas coming in, so I think succession. I mean, how are the succession plans going?
Well, I talk to the board about succession often. It's something that the board and I began when I got this job. It's a very, very important responsibility of a board of directors, and I believe of a CEO too, to help the board identify and prepare a successor. And I've been hard at work at doing that with the board, engaged in good dialogue with them, exposing them to a lot of people, giving people that work for this company broad opportunities to interact with the board so they can be judged in that light.
Right.
I feel good about that.
Is there pressure to name it a successor by a certain time, or is it kind of a little open-ended at this point?
No, I don't think, there's not pressure other than to conduct a really solid and effective process. That's really important for this company and for all companies.
And Adam, for the moment, Bob Iger is focusing really on one thing, and that is running the Walt Disney Company.
And there's so many different components to the company. They had earnings this week, knocked the cover off the ball. I noticed the digital division was the best performing, up about 13%. Do you get a sense for how digital is changing the business?
Well, it's funny, interactive overall at Disney, it's the smallest business component in terms of revenues, but it's an important one, according to Bob. And he has said, he mentioned on the earnings call this week, he has said it will be profitable, and he set a year for that, 2013. So it's an important business, and he talked about some of the moves that they've made, that maybe some of them weren't right, but they're definitely committed to that business. It's part of the overall Walt Disney Kingdom.
Hey, Carol, Mike Norman here. How you doing? Did Bob Iger say anything?
Mike.
Great. Did he say anything about what he's going to do after he leaves Disney? I mean, why would anyone leave that job anyway? I mean, he's one of the top-paid CEOs, I think. What are his plans?
And he's doing a great job. He wouldn't tell me what he's doing. You know that there's been some speculation that he might move into politics, but he said, you know, he's focusing on running the company right now, and he's really not quite sure, you know, what he's going to do after Disney. He's got a few years, though, to figure that out.
Yeah.
All right, Carol, blockbuster job out there at Disney. You've been out there all week. It's been great. Thanks for the insider's look. All right, when we return, everything you need to know to prepare for trading next week, our market roadmap. We're back in 2.
This is an incredibly bad event. I mean, there's no way to downplay it, and it's not just bad for J.P. Morgan, it's bad for the industry, and it's bad for the stocks.
That was banking analyst Dick Beauvais of Rockdale Securities talking to us, of course, about J.P. Morgan. This is Bloomberg Rewind. I'm Adam Johnson, in for Matt Miller. For a snapshot of everything you need to know to prepare for trading next week, let's get right out to Gigi Stone. Gigi, what do we need to know?
Adam, it's a big week next week. A lot of things to watch out for. A group of 8 heads of government holding their annual summit. Discussions will focus on how to reinvigorate global growth. And Euro area finance ministers will convene in Brussels. That's as Greece's political turmoil reignites concerns about the country's capacity to abide by the terms of the bailouts. Now, according to Citigroup, the risk of Greece leaving the euro by the end of 2013 has actually risen to as high as 75%. Here in the U.S., we're going to be hearing economic data on retail sales, industrial production, as well as housing starts for April. Investors will be watching for earnings from Home Depot and Carlyle Group, and they'll be focused on Chesapeake Energy, the heavily indebted firm, revealing it may be forced to delay some asset sales. All eyes next week, of course, going to be glued to Facebook as it makes its Wall Street debut, scheduled to raise as much as $11.8 billion in its IPO, and Facebook plans to list on the NASDAQ under the symbol FB. Also, important to note, the Cannes Film Festival opens next week with the likes of Nicole Kidman and Brad Pitt. I'm sure, Adam, you have to take some time off because they need you, clearly.
You know, I was going to say that's actually your kind of event, Gigi. I think you'd look very good in Cannes.
I think so, too. Neither of us are probably welcome.
Well, I don't know.
We'll watch it on TV.
We'll give it a whirl. We'll see what they say. The worst case, they say no. We got to stay home and do Rewind.
Good deal.
Okay. Gigi, have a great weekend. We'll see you on Monday. All right, guys, market roadmap for next week. Industrial production, that's coming out, I believe Gigi mentioned on Wednesday. That's a big deal. Joe, what's the number you're watching for tomorrow?
I'm looking at retail sales because, you know, we had such an unseasonably warm winter that pulled forward a lot of demand. Because it's the April number, we're likely to see consumer spending decelerate somewhat significantly. Given that this is a nominal release, excuse me, this is a release, it's not inflation adjusted, because we had that decline in gasoline prices in April, we're likely to see a negative number.
Now, here's the thing. Let's be chess players now.
Yeah.
Everyone knows it was a warm winter, and it pulled sales forward. So if, in fact, the number is bad, do we not necessarily trade down? What do you think, Mike?
Yeah, well, you know, up until today, I would have said, well, you might want to go into next week looking for a bottom, a short-term rally. But I think what broke in terms of the news and J.P. Morgan is going to put a pall over the market. Look, the economic data has been trending negative. It's been below expectations for some time now. We've seen an adjustment in the market. I think that some people probably were of the view that we could stabilize at these levels if we get any sort of a positive surprise. And we saw some things like weekly unemployment claims trending down again. I mean, that's a positive thing.
So
but I think, look, we're going to be loving it by the time the Facebook IPO comes out on Friday, because I think we're going to be needing that good news by then, you know, given what we're going to see in the beginning of the week with the J.P. Morgan situation.
Fasten your seatbelts for Monday morning with the J.P. Morgan
Monday
news, right?
morning, J.P. Morgan's to be bad, but watched events in Europe also going to pick up next week. They're going to have to set an election in Greece, and that's the next big thing.
Yeah, bingo. All right, thanks, guys. That's the market roadmap for next week. When we return, Michael and Joe will tell us what they are most worried about in the markets. Plus, yeah, you guessed it, our market songs of the week. Rewind. We're back in 2.
We are in I don't know, maybe a deflated bubble, but it's going to stay that way. I think treasuries are going to stay low. There's huge demand for treasuries. Inflation, looking at the numbers today, is stubbornly muted. I don't think it's going to go up.
That was Margie Patel of Wells Capital Management giving us her outlook on bonds. This is Bloomberg Rewind. I'm Adam Johnson, in for Matt Miller. Well, we are talking about the direction of the economy and market strategy with Mike Norman of John Thomas Financial and Joe Brusuelas of Bloomberg LP. 2 economists in the house.
Uh-oh.
Yes. That means there's always much debate. I'm not sure we'll get any answers.
There's 3 opinions.
There's 3 opinions, 2 guys. All right. It's that time of the show when we get to ask the guests to tell us what they are most worried about. Guys, what keeps you up at night?
Well, you know, I'm worried about the fiscal cliff the U.S. economy is rapidly approaching. And this has little to do with the economy and everything to do with policy. That we've had a grievous policy over the last couple of years where we're going to allow the Bush tax cuts, the Obama tax holiday. We've got automatic sequestration kicking in and the end of some emergency unemployment benefits all January 1st. And unless we get policy taken during a very difficult presidential election, we could take a 4% hit to GDP next year.
And, of course, Mike, that was exactly your point. You said you need to spend more money,
this?
right?
Can you believe this? We're going to agree here. Yeah, I think the fiscal drag that we're going to see, we're already seeing it this year. You know, it's starting to bite, but it's really going to hit by the end of the year and next year. And, you know, it's being offset to some degree this year with private credit formation. We're seeing expansion in bank loans, consumer credit. But, you know, households can only load up on debt so far. You know, we saw that movie. It doesn't end very well, all right? Next year, and yeah, to get to your point, I think the way to fix things is that you need to lift the level of government spending. Basically, you got to expand the size.
Paul Krugman's argument.
Well, it's a Keynesian argument. It works. It worked in the past. It'll work now. It even worked in the small stimulus that we had in 2009 when we saw the economy go from a negative 6% rate of growth to a positive 6% rate of growth, and we saw everything basically turn around. The stock market doubled. We started to create new jobs. So, I mean, the key to we have the tools to fix it, but as Joe mentioned, policy-wise, it's not going to happen. I mean, that's off the table. You know, it's interesting. Voters in Europe just repudiated austerity, okay? Here, we're embracing it. We're going into it. So that's very disconcerting.
As I hear you guys talk about this question, do we put the need to reduce unemployment ahead of concerns about inflation? Go ahead, spend money.
What inflation? You just heard it was like negative. The PPI
but
was
ultimately, if we're printing all this money, it creates inflation. Do we not worry about the debt? Do we not worry about future inflation? Just put people back to work? Is that the answer?
If the money printing, which is the wrong term, but I'll use your term, if the money printing equates to a greater output of goods and services at the same time, you're not creating inflation because the supply is offsetting the amount of money that you're being created. The only time you have to worry about inflation is if everybody's employed. You're running at full employment. There's not a single person left to produce anything more, and you keep printing.
All right,
we're
so
nowhere near there.
We got room to go. Joe, your song of the week. What song sums up this whole crazy economy of ours?
Well, I thought it was Frank Sinatra's That's Life, because if we're looking at Jamie Dimon, he went from the high of the highs to the low of the lows. And, you know, I think that we're going to see him try to rebuild both his tarnished image and the balance sheet at that bank, and that's going to be one whale of a challenge.
How long is that going to take?
Oh, we're talking a good period of time, because it's going to take them maybe till the end of the year, early next year, to unwind those speculative bets that were made over in London. So it's a multi-year project.
And that's, of course, one of the concerns that we were just hearing about from Don Kopecki. You still got those positions on, so the $2 billion loss could get bigger.
It could get larger.
Mike?
Listen, I love that he likes Frank Sinatra. I might start singing My Way right now.
All right, so
look,
what's your
Otis
song?
Redding sitting on the dock of the bay. We're just sitting here doing nothing, okay? And there's a lot that we can do. It's very easy to fix this economy. We don't lack anything. This is a no-lack nation. We have abundance. We're just not using it because of a belief system that precludes us from using it.
So you would like to see us spend more money?
I would like to be president, actually, but yes, I would like to.
Sounds like you'd like to buy Paul Krugman a drink and commune with him.
There are things I agree with when it comes to Krugman. There are things that I don't agree with. Let's put it that way.
I think we ought to only use the inflation weapon as a last resort. I think there are more sensible forms we can take to get the economy moving in before we resort to outright printing of money.
All government spending is money printing. All taxation is money unprinting. So you can call it that, but it is what it is. All government spending under a fiat monetary system where basically the nation issues its own currency, that's money printing.
A great conversation. Joe Brusuelas, Bloomberg's own economist, Bloomberg LP, and of course our man Mike Norman of John Thomas Financial, another economist, two opinionated economists. Remember, you can watch all your favorite WeWind moments on Bloomberg Television's iPad app. We'll see you on Monday.